Okay, good afternoon and welcome to another video from Investing Cube. My name is Eno Eteng, market researcher with investingcube.com. So for this video, we're going to be looking at what's going on with the US dollar, and the best place for us to get a view of what's happening is the US dollar index. This is the chart of the US dollar index daily chart showing right here. Now, why are we looking at the US dollar specifically? Last week, the US Treasury increased the scale of its bond buyback program from $2 billion to $4 billion per operation. Now, essentially, that was an intervention in the US bond market, where bond yield has surged to multi-decade highs on the 10-year and 30-year note. So the action of the US Treasury was basically to inject liquidity into that market and also to stop the bond yields from surging too high. As you would know, US bonds are actually government debt instruments, and the yields on those bonds are the interest the government pays for borrowing such monies from investors. And so if US bond yields just keep rising, it increases the borrowing cost to the US government. Okay. And so what the US Treasury did was basically to take an action to cap these borrowing costs and also to provide more liquidity to the market to stabilize it. Now, what that did is that it caused the US dollar to lose its appeal in the market because it reduced the yield advantage it has had over several currencies. And so we saw a fall in the US dollar almost from Wednesday last week to the week closed for trading on Friday, the 21st of August. So you could see right here on the US dollar index that after price had retested the 101.67 price mark right here, this was a double top formation, and 100.61 formed the neckline of the pattern. And so when this candle broke through the neckline, it confirmed the double top pattern and led to a steep drop in the US dollar. And having broken this neckline, the measured move usually is typically calculated as the distance between the tops and the neckline, and then extrapolated downwards gave us the support level at 99.44 as the first target for downside move. But what you now saw happening right here was that this now essentially became an area of consolidation as the US dollar struggled for recovery but couldn't really do it above the 99.99 price mark. And so this leg down now became a bearish flag, and the breakdown of 99.44 now gave the bears opportunity to continue with the completion leg of the bearish flag right here. And having completed that move at 98.62, the US dollar staged a little bit of a recovery, okay, but this recovery has lacked conviction. So the dollar is still largely lower against several of its pairs, as evidenced on the chart of the US dollar index. So heading into Wednesday, which is when the US Core PCE Price Index data will be released, we are seeing that the US dollar, even though it has recovered some ground in the New York session for today, still has a lot of weakness in it. And you could see that on several pairs, okay, the US dollar remains weak. Of course, we noted the surge in cryptocurrencies that were paired with the US dollar, and also you could see pairs like the Euro USD and even gold also the US dollar weaken dramatically against the base assets. So Wednesday we'll have the core PCE price index. The markets are expecting a reading of 0.2%, which would be an improvement on the previous reading of 0.1%. We're also going to be seeing the release of the preliminary GDP, where the markets are expecting the figure to remain stagnant at 1.5%. Once that news release is concluded, the markets will now shift their attention towards the Jackson Hole Symposium, slated for Thursday and Friday. This symposium is a collection of central bankers from the G10 countries. These are the major currency pairs that you see listed in the FX market. So every year they get together to discuss their thoughts and the outlook for monetary policy as far as the global economy is concerned. So it's a widely followed event, and it tends to cause some dramatic market volatility during the course of the symposium. So that symposium will be taking place on Thursday and Friday. Is going to generate a lot of market volatility, especially on US dollar pairs, basically because the US dollar has already shown dramatic volatility heading into this symposium. Also, we need to pay attention to the geopolitical front. The US has released its first set of sanctions against Iran. The markets did not really respond too favorably to oil prices in that respect. So you saw oil prices decline by 2.52% this Tuesday, following a decline of 3.5% on Monday. So this decline in oil prices has given currencies that are linked to crude oil imports a reprieve. So you're seeing currencies like the Indian rupee, you're seeing risk associated currencies like the Australian dollar, New Zealand dollar, and the euro and the British pound all gaining some ground because of the support that the fall in oil prices has given them. So this is what we'll be looking at for now. We hope that you can take advantage of this information and make something with it heading into the Jackson Hole Symposium. We're going to be doing another video on Thursday morning where we're going to preview the symposium, and we're going to be looking at what the Core PCE Price Index did on Wednesday. So until then, I would say bye bye for now, and keep your trading disciplined and keep it profitable. Thank you.